All right, guys. So things are getting desperate. When the White House embarked on the trade war, they didn't have all their ducks in a row. Supply chains, for example, were not fleshed out. So import costs have flown up, especially when you impose a global tariff on everything. But that's not all. Because of all the chaos, global investors, they have been dumping a ton of US assets. And whether it's treasury bonds or US stocks, the sell-off has been brutal. The dollar has crashed by over 9%, and it could continue to tumble the longer this trade war continues. The problem goes beyond just higher import cost. As an investor, especially a foreign one, you are facing a big hurdle to put money into the US. Even if the returns on US stocks and bonds are positive, the dollar plunging could eliminate all of your returns. You could go into the negatives. Bess knows how dangerous this fear factor is. While it's true that a weaker dollar can help US exports, a collapsing currency is a totally different animal. So he's now giving a frantic financial pitch to global investors. He is telling everyone to buy US assets, especially treasury bonds. But notice how his voice is quaking. America deserves a golden age economy. So for the past 100 days, we've been preparing the soil. We have uprooted government waste and harmful regulations. We have planted the seeds of private investment. And we have fertilized the ground with fresh tax legislation. Next, we harvest. And we want you to harvest with us. America is the Schelling point of global finance. We have the world's reserve currency, and the deepest and most liquid capital markets, and the strongest property rights. For these reasons, the United States is the premier destination for international capital, and the administration's goal is to make it even more appealing for investors like you. Now, this is straight from a comedy show. Bessent is doing a stand-up, and it's a really peculiar speech. Reminding the world of the dollar's reserve currency status isn't a good look. Telling the world that you have the deepest capital markets is another way of saying the US has a debt problem. He's giving a sales pitch. He knows the trade war is crippling the US economy, and we are halfway towards a recession. The moment tariffs were placed on China, US industries were completely hobbled. Even Yellen is scolding him. She's warning of the coming US recession, and it all revolves around the tariffs on Chinese imports. The US is highly dependent on China for most of the critical minerals that go into clean energy technologies and batteries. She also admits the obvious. Huge tariffs on them will US industries struggling to survive, especially those with high margins. And, if Yellen understands this, everyone else on planet Earth can see this as well. The US economy is being torpedoed by their own senseless terrorists. Now the myth of US markets being exceptional is starting to break down. Over the past week, we have seen nothing but pinball action, whipsaw trading, that tells us everyone is still extremely uncertain. Q1 GDP came in negative, and that's even before the reciprocal tariffs. We had a -5% move from imports. Americans are so freaked out they went ahead to front-load all their purchases before Trump trade war went into overdrive. Now, this doesn't mean the US consumer has a ton of money. It's the exact opposite. You are front-loading future demand today, which means in Q2 and Q3, consumers might not make any purchase at all. Bessent must really think we're all stupid. 70% of the entire US economy is driven by private consumption. People going out there to buy stuff. Well, the numbers from the conference board are out, and it's all not looking good. Consumer confidence has regressed to the lowest level since the pandemic. To people, the economy and labor market is in crisis mode. Meanwhile, expectations have plunged to the lowest level since 2011. The amount of consumer fear is palpable, which means company earnings are going to collapse. Even companies like McDonald's, they are seeing their sales drop by the most since 2020. There's a good reason why Bessent is trying to keep everyone calm. He needs money to keep flowing into US markets. The entire system is so hyper-financialized that both equity and bond markets can't afford to suffer a collapse. It will make people feel poorer. So Bessent is giving the ultimate investment pitch of a lifetime. U.S. markets are anti-fragile. Indeed, the entire history can be distilled into just 5 words: up and to the right. On a long-term horizon, it's never a bad time to invest in America, but especially now. The United States is entering a new golden age of economic prosperity for both Main Street and Wall Street, and we don't want anyone to get left behind. Come with us so we can build a more abundant America together. Now, this is crazy on so many levels. Bessent just told the world that U.S. stocks and bonds will keep going up to the right, that the end destination is to the moon. Well, I guess if you keep deficit spending your way, the numbers will always increase. But that doesn't mean the U.S. markets are bulletproof and that you'll get a decent return at all. Even Goldman doesn't know where U.S. stocks will go by the end of the year. We could still be on track for a bear market, and that would mean another 10% drop from where we are easily. The upsides are also limited thanks to all the crazy valuations driven by the old narrative. We might only get a positive 3% gain versus the market peak. How is that a good deal? If the U.S. economy was really exceptional and forever robust, there's no need to sell a product that everyone wants. There's no clarity on trade policy. And the biggest issue, the China terrorists are far from over. Bessent is conducting a fire sale when the house is already burning down. We just need to sit back and think about what asset is actually going strong. It is gold. The ultimate barometer of the dollar collapse is sounding the alarm bells now. Big whales in the market are not believing what Scott Bessent is selling. And if money leaves the U.S. market, it has to go somewhere else. After all, inflation globally isn't over and will continue to be a persistent crisis. Now, just a day ago, the price of gold flew up by 1% in 30 seconds. Now, this is a $22 trillion market, is the next biggest after U.S. Treasuries, and to move the price at that magnitude in seconds requires billions of dollars, tens of billions, flowing into the gold market. Bessent wants the money going to gold to reverse back to the U.S. markets, because a rising gold price undermines the stability of the dollar and the status of the S&P 500. So why is Bessent on a frantic financial page? He's like an insurance agent trying to sell you an investment-linked policy, and the underlying driver is the U.S. economy, which is heading towards a recession. Now, waging a global war is 1/3 of the Trump equation. It's the stick to force companies to uproot and move their operations to the United States. But much more is needed for this reshoring plan. Now listen to the agenda very carefully here. What I've been talking about is privatizing the economy. So on one side, we're going to be bringing down government spending, and which has been crowding out the private sector. We're also going to be shedding excess labor on the government side. Then on the other side, we have a substantial financial deregulatory, the agenda coming from we put a lot of new regulators in place. So the private sector can relay focus on community banks, small regional banks, which were very near what I would call an extinction event in the next 4 or 5 years. So the idea is to get them lending again too. So government spending is coming down. At the same time, Trump wants to unleash a plethora of tax cuts to bring the corporate tax rate from 21% down to 15%. The regulation is also on their agenda to get U.S. banks to lend more. But all that puts enormous strain on the U.S. deficit. And to fund all these grand plans, the U.S. government needs to keep borrowing money. There's no question about it. And guess who he needs the money from? Bessent requires global investors to pony up dollars to buy U.S. bonds because that's where the money has exactly flown to. In March, the U.S. goods trade gap has increased by 9.6% to $162 billion, the highest in recorded history. So Americans have been sending more money abroad to buy cheap goods before Trump's terrorists hit their wallets. Now that is a good move, but it also means global capital has shifted out of the U.S. into the hands of countries in regions like Asia. Money is flowing away from U.S. consumers into the hands of global exporters. And now Scott Bessent wants the money back to reinvest in the U.S. bond markets. He wants the world to recycle their money back to America. Now the trade deficit isn't good. But there's another big problem. Funding the U.S. government is a process that never ends. The U.S. Treasury is on track to borrow $514 billion this quarter, from April to June 2025. The amount is in a higher range of all the forecasts. A deluge of U.S. bonds is about to come crashing down on investors. Now, will there be buyers of the bonds? Sure, there will be. But the problem is, at what yield will the debt be sold at? The Fed isn't going to lower rates thanks to the trade war, so short-term yields won't come down. Borrowing there will increase the national debt and open the door to a refinancing shock down the line. But Bessent also can't afford to issue more long-term bonds. It will push up the borrowing cost of everything in the U.S. So his latest strategy is a sales pitch to the world, telling everyone not to bet against the U.S. economy. And boy, is he selling the dream like no one else. When I entered public service, I spent more than 40 years in the asset management business. There, one mantra guides one of the world's most successful investors: never bet against America. Warren Buffett coined the phrase, and it's been his loader as long as he's been in the game. Never bet against America captures a time-tested truth. The American economy is unstoppable. Throw whatever you will at our capital markets. The Great Depression, 2 world wars, 9/11, a COVID recession of the last few years, or sky-high inflation. Each time the American economy gets knocked down, it gets back up again. And it gets back up even stronger than it was before. Now, you know things are bad when you have to quote Warren Buffett. Even Warren has admitted that the dollar is in crisis. Will investors really believe his marketing page? Now, maybe some will, but most people, they are waiting for the biggest issue to be resolved, and that is the U.S.-China trade embargo. And let's get real here. With over 100% tariff on both sides, barring a few exemptions, trade will eventually grind to a halt. Inventories in the U.S. could last for a month or two before the threat of empty shelves becomes very real. Now, just take the container ship OCL Violet that just docked in Long Beach. It was carrying a ton of goods bound for the U.S. The majority of staff on board were from China, a total of $560 million worth. And thanks to the tariffs, imports now to pay an additional $420 million to take delivery of the goods. That's an effective tariff rate of 73% on Chinese imports. Now, call me crazy, but I don't think you can pass down a 70% tax to all consumers. Many importers themselves will go under if they absorb the tariffs. When shelves go empty, prices go higher. You have the same amount of money chasing fewer goods. U.S. consumer budgets are about to get decimated. And with that, company earnings are going to drop. So, Washington can go and make as many sales pitches as they want. But global investors, they're not going to comply until the tariffs on China and the world starts to drop down. However, we keep getting mixed signals from the administration. It's either Trump teasing or Nick trying to keep us guessing. But Bessent once again makes it clear there's been no talks yet. He's still peddling the idea of Chinese factories collapsing. You're heavily involved here. You have said they need to de-escalate and start that process for us to get going on trade talks. Have they made any effort at this point? I think we could see substantial progress in the coming weeks. We'll see that as I think it's Stein's law that which is not sustainable, doesn't continue. So 145%, 125% tariff levels are the equivalent of an embargo. Yep. And we're reading every day what's happening with factories in China. And from an academic point of view, I can tell you that the history of trade battles, we are the deficit country. The surplus country always has the most to lose. So they need to make more gestures. What is it that you're looking for, and is that happening? Is there a negotiation about the negotiation? Yeah, we will see over the coming weeks, and you will see what President Trump wants to accept. So, the U.S. economy today is in a state of limbo. No one has a clue what's going on. We have indications of talks coming up in Switzerland, but it'll be tough negotiations ahead. Meanwhile, all the other trade deals are falling apart. The deal with Japan has stalled. Zero formal agreements have been signed yet, and it's more than 30 days at this point. That's why US markets are under tremendous pressure. Everything revolves around the trade wars today, and behind the sales pitch of the US being unstoppable is actually one big disaster show. But let me know what you think. Did Bessent give you a convincing performance? And are we all wrong and US markets are actually going to rebound soon? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through this crazy times.